Ladies and gentlemen, good day and welcome to the Dreamfolks Services Limited Q2 and H1FY25 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. Before we begin, let me remind you that this discussion may contain forward-looking statements and may involve known or unknown risks, uncertainties, and other factors. It may be viewed in conjunction with the company's business. Risks that could cause future results, performance, or achievements to differ significantly from what is being expressed or implied by such forward-looking statements. Today on this call, we have with us Ms. Libertha Kalat, Chairperson and Managing Director, Ms. Jia Diwan, Chief Financial Officer, Mr. Balaji Srinivasan, Executive Director and Chief Technology Officer, and Mr. Sandeep Sunavne, Chief Business Officer. I now hand the conference over to Ms. Libertha Kalat. Thank you, and over to you, ma'am.
A very good evening, everyone, and thank you for joining us on the earnings conference call for the second quarter and first half of the financial year 2025. We announced the financial results earlier today, and I hope you had a chance to go through the results. Our investor presentation and press release, which are available on the stock exchange and on the company's website. Our organization reported steady revenue growth in this quarter, with 12.2% year-on-year increase to rupees 316.9 crores in Q2FY25. The gross profit for the quarter stood at rupees 39.2 crores, marking 11.9% growth and achieving a gross margin of 12.4%. The first half of the fiscal year has been characterized by decent performance, with revenue increasing by 16.2% year-on-year to rupees 637.7 crores and gross profit surging by 21% year-on-year to rupees 76.8 crores, which equates to a gross margin of 12% in first half financial year 25, an improvement from 11.6% in H1 FY24. Our adjusted EBITDA for the quarter was recorded at rupees 25.5 crores with an adjusted EBITDA margin of 8.1%. For H1 FY25, the adjusted EBITDA reached rupees 51.3 crores, reflecting a year-on-year growth of 10.6% and an adjusted EBITDA margin of 8%. Over the preceding quarters, our discussions have centered on a strategic direction of our organization. Fundamental to these strategies is the principle of diversification and expansion encompassing a broad spectrum of services beyond airport lounges, clientele belonging to different sectors, and a wider geographical reach. Our commitment to these strategies remains persistent, and it is with the dedication of our team that we have seen positive outcomes on these fronts during the quarter. In alignment with our strategic initiative to broaden our horizon beyond airport lounges, we have in this quarter embarked upon provision of highway dining services to our customers. These new services enable us to cater to the needs of the highway travelers by offering them superior dining experiences during their transit. These services are anticipated to be accessible at 600 plus establishments situated along the key national highways. Furthermore, we have augmented our service offerings with our introduction of excess baggage services for the convenience of our clients. There have been other notable developments in these services other than India Airport Lounge. We are pleased to report that our golf services are gaining momentum, as evidenced by the addition of Golf Academy, which offers coaching sessions and golf courses dedicated to golf games. The increasing popularity of golf in India is a trend we anticipate will persist and will continue our efforts towards adding more courses throughout the country to make the sport more accessible for the customers. Furthermore, our meet and assist services have been enhanced by the addition of new touchpoints in Africa. With respect to the diversification of our client base, we have achieved considerable progress in onboarding new enterprise clients during this quarter. Our collaborations have expanded to include 7 enterprises from various sectors. To highlight a few noteworthy partnerships, we have established a relationship with Akasa Air, the latest entrant in the airline industry. As part of this collaboration, Akasa Air crew members will be granted access to our airport lounges, providing them with a space to unwind between flights, thereby offering an alternative to hotel accommodations or prolonged waits in terminal areas. In addition, we have engaged in collaborative campaign with Amazon during the Amazon Prime Day period. Our services were integrated with Amazon Pay on their co-branded credit card statement page, enhancing the customer experience during this promotional period. Another addition to our portfolio is Countrywide Networks, a loyalty firm specializing in rewards and recognition or incentive programs for other corporations. Through this partnership, Dreamfolks services will be incorporated in their reward and recognition offerings. These examples represent just a few of the new enterprises that have joined our extensive list of clients. For further details on our client expansion, I will refer to Sandeep, who will provide additional insights. We are pleased to affirm that we have maintained 100% coverage at all Indian airports. During the quarter, we have extended our lounge services to include 3 new lounges at Pune Airport and the business class lounge at the Kochi International Airport. Following these additions, the aggregate number of lounges within India featuring Dreamfolks presence has reached 74 lounges. On the international front, we have also augmented our global lounge network with additional lounges. In total, 38 lounges have been integrated into our international network, with a predominant expansion occurring in Asia. Now, allow me a few minutes to talk about the industry. The future of the travel industry continues to look promising in India, with expectation of robust growth driven by a combination of socio-economic factors, technological advancement, and strategic initiatives by the government, as well as the companies operating in the space like Dreamfolks. Projections by the World Travel and Tourism Council suggest that the sector could grow at an annual rate of 6.9% to reach $512 billion by 2028, accounting for a significant portion of the national GDP. As the number of airports in India continues to rise, especially in high-traffic markets and Tier 2 and Tier 3 cities, existing airports are expanding their lounge facilities, thereby accommodating a greater number of travelers. The Indian Civil Aviation Ministry has expressed optimism about the future growth of the aviation industry in India. It has set an ambitious target of increasing the number of airports in the country from 148 in FY23 to 235 by 2030. One of the key drivers of growth will be the domestic tourism. With a population of over 1.3 billion and a rapidly growing middle class, the potential of internal travel demand is immense. International tourism is also set to expand, with Indian position as a compelling destination for cultural, spiritual, adventure, and wellness tourism. The government's efforts to streamline visa processes and improve infrastructure are likely to facilitate this growth. Another industry we are associated with is the credit card industry. The credit card industry in India is poised for significant expansion, shaped by a confluence of technology advancements, regulatory changes, and evolving consumer behavior. In recent years, the penetration of credit cards has seen a steady increase, with the Reserve Bank of India reporting a rise in the number of credit card accounts. The number of credit cards in circulation has grown by 14.1% in Q2 year-on-year to 106.1 million. The surge in credit card usage in India can be attributed to several factors. The banking landscape is undergoing a significant transformation, with a growing number of banks, credit cards, and fintech companies partnering with startups and new age business to encourage credit card usage. It is projected that the number of credit cards will increase by 33 times over the next 2 decades, driven by the shift towards digital payments. Further, factors such as growing middle class, increased digitalization, and a shift towards cashless transactions have contributed to this uptrend. Demographic trends are also in favor of credit card growth. With one of the youngest population in the world, India's Gen Z and millennials are more open to adopting credit cards as a preferred mode of payment. Now to conclude, Dreamfolks has demonstrated its growth pattern by delivering strong performance in the quarter as well as in the first half of the financial year. The strategic decision and expansions we have undertaken this quarter, from diversifying our services to enhancing our lounge network, will bear fruit in future. Our technological resilience and swift response to service disruptions further exemplify our commitment to operational excellence and customer satisfaction. These accomplishments are not only a testament to our team's dedication, but also a clear indication of our capacity to navigate challenges and maintain a trajectory of reliable service delivery. As we look ahead, we remain focused on leveraging our strength and exploring new opportunities to continue this upward trend. We are confident that our strategic initiatives, coupled with positive outlook for the airline industries, will propel us towards greater heights in coming years. With this, I would like to invite Sandeep to give an update.
Thank you, Librata. This quarter was an eventful one as far as the business was concerned, and happy to discuss the strategic trajectory that our organization has embarked upon in the recent quarters. As Librata mentioned, our strategy remains rooted in diversification in terms of services, clientele, and of course, geographical expansion and improving our footprint there. During the quarter, our organization has taken a significant stride in expanding our service offerings, aligning well with our strategic goal of growth and diversification. We have launched highway dining services to cater to the needs of travelers on 60 key highway routes emanating from major cities like Delhi, Mumbai, Bangalore, Chennai, etc., with plans to make these services available at over 600 plus establishments. Our highway network continues to grow and road travel gains popularity. Dreamfolks is proud to extend its premium hospitality to ensure travelers enjoy exceptional dining at every stop along their journey. Additionally, we have introduced excess baggage services to enhance the convenience for our clients, where eligible cardholders can ship their excess luggage free of cost from inside the airport premises. Furthermore, we have significantly diversified our client base, adding new 7 enterprise clients from various sectors, and we continue to do so. In conclusion, our company stands at the forefront of service, innovation, and strategic expansion. The initiatives we have undertaken this quarter, from the introduction of highway dining service to expansion of our airport lounge network, reflects our dedication to meeting the evolving needs of our clients and travelers worldwide. As we continue to diversify our offering and forge new partnerships, we remain committed to excellence and the pursuit of growth. These advancements are not just milestones, but stepping stones towards the future, where our company sets the benchmark for service and innovation in the industry. Thank you. Now I hand over mic to Bala.
Thank you, Sandeep. Our state-of-the-art technology infrastructure is the backbone of a company's success. The core of a business is a proprietary platform aimed at providing our customers a hassle-free experience. Our platform is the realization of a vision to provide a seamless experience for every individual who interacts with our services. Our tech forms one of the key differentiators we have at the company. With this tech stack, we are able to develop and offer our banking partners customized as well as advanced products to optimize the spend by pushing targeted products to the end consumers. This will drive a high quality and a personalized value proposition instead of a conventional one-size-fits-all solution. The agility of our platform has paved the way for forging new alliances and broadening the spectrum of our services. We follow an asset-light philosophy, as our entire platform technology is cloud-based, which allows lounge operators and other partners to check the consumer's benefits on a real-time basis. Our advanced technology empowers seamless access to a wide range of airport services through various channels, including credit and debit cards, card issuer applications, our own apps, self-check-in kiosks, and web-based portals. This seamless integration of our technology with our banking partners have enabled us to reshape the benefit structure, allowing for a deeper and more intuitive connection between our platform and the services. In conclusion, Our proprietary tech platform is more than just an asset. It is actually the backbone of Dreamfolks, fueling our growth and enabling us to leave an indelible mark on the travel industry. As we look to the future, we remain dedicated to leveraging our technological capabilities, deliver unparalleled value to our clients and partners alike. Now I would hand over to Jia for an update on the financials for the quarter. Over to you, Jia.
Thank you, Bala, and a very good evening to everyone. I will begin by giving you the Q2 FY25 highlights first. With a focused approach from the team, we continue to see steady performance across key operating metrics. The company reported a revenue of rupees 316.9 crores, marking a growth of 12.2% from rupees 282.5 crores in Q2 FY24. The company continues to have strong customer relationships and a focus to expand existing relationships to build sustainable and reliable revenue streams. Gross profit grew at 11.9% YOY to rupees 39.2 crores in Q2 FY25 as compared to rupees 35.1 crores. Gross profit margin was at 12.4% in Q2 FY25, similar to Q2 FY24. Adjusted EBITDA, adjusted for non-cash ESOP expenses, was at rupees 25.5 crores, down by 4% as compared to rupees 26.6 crores in Q2 FY24. This reduction is largely due to our commitment to investing in talent across various regions, aimed at enhancing our performance and foster long-term value for all stakeholders. Adjusted EBITDA margin was at 8.1% as against 9.4% in Q2 FY20. Profit after tax was at rupees 16 crores as compared to rupees 17.7 crores in the same quarter of last year. PAT margin declined to 5.1% in Q2 FY25 from 6.3% in Q2 FY24. We continue to have strong balance sheet with our net worth currently at rupees 264.8 crores, up 35.8% compared to the same time last year. Our cash and cash equivalent balance as at quarter end stood at 45.7 crores. During the quarter, we witnessed an increase in our debtors due to implementation of spend-based programs by most of our clients. This resulted in a temporary increase in our working capital cycle, resulting to slightly lower net investment income during the quarter. Now, moving on to highlights for the first half of FY25. Revenue grew by 16.2% YOY to reach rupees 637.7 crores in half year FY25 as against rupees 548.8 crores in half year FY24. Gross profit for first half of FY25 was at rupees 76.7 crores, growing by a strong 21% YOY from rupees 63.5 crores in first half FY24. Gross profit margin was at 12% in first half of FY25 versus 11.6% in first half of FY24. Adjusted EBITDA for the first half of FY25 was at rupees 51.3 crores, reporting a growth of 10.6% YOY. Adjusted EBITDA margin was at 8% in first half of FY25 as compared to 8.5% in first. PAT stood at 32 crores in first half of FY25 as rupees 30.6 crores in first half of FY24. PAT margin in first half of FY25 was at 5.2% versus 5.6% in first half of FY24. Earnings per share for the first half of FY25 stood at rupees 6.3, up 7.8% YOY. We remain confident about delivering sustainable growth backed by our robust financial track record and efficient asset-light business model and low-cost operating framework. This confidence is further reinforced by our strategic initiatives that are projected to result in a sustainable revenue stream. Now with that, I would like to close my remarks and we are happy to open the floor for questions. Thank you.
Thank you very much, ma'am. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. Our first question is from line of Omkar Chitnis from Trade Brains Private Limited. Please go ahead.
Thank you for giving the opportunity. My first question is, as recently you ventured into the highway dining business, I want to know how this highway dining service differ from the traditional restaurant business, which are more popular among the travelers in India. So I want to know what are the marketing efforts and strategies companies able to promote to get more number of visitors to that.
So it is different. First of all, it is different from the regular offering that you and me are availing today as far as the food is concerned. Here what we are talking about is basically benefit that will be given to the consumer on the card that he or she is holding. So for example, imagine if you are traveling from say on a highway from Bombay to Pune, and in between you have say a food court. And what if you are traveling along with 2 or 3 friends? So you actually go into the outlet which is part of our outlet base, and you go there and tap your card and avail the benefit as a free meal, which is again offered or sponsored by some of the issuers. And the other members of the your family or even for that matter relatives can enjoy at a discounted rate. So this is the offering that we are giving, which is actually in the form of benefit on the card by the issuer. So that is question number 1, or rather answering to the first part of question. The second part of a question in terms of what are the efforts that you are doing, of course we will communicate that to the consumer. One is of course the issuer will communicate to the consumer as a part of a standard communication. Secondly, as a consumer, you will at the participating outlets also know that these are the outlets which actually have these card programs, and I can actually enjoy the benefit on my card in these outlets. So of course this will happen simultaneously.
Okay, sir. Coming forward by this question, is the highway business model is asset light model, right?
Yes.
Yes.
It's an asset light model. This asset light model is managed by third party or management side?
So the model is going to be the similar thing which we are doing it right now also with the airports. So here also it's not going to be our outlets, we are going to partner with the F&Bs which are present at the highways.
Okay.
So obviously there is no investment from Dreamfolks.
Okay, thank you. And my last question is, what is the average daily footfall size in airport lounges in the present quarter, and what is the average ticket size per customer?
The total PAT for this quarter for us was 2.59 million.
Mm-hmm.
And there is nothing like a per pack kind of footfall rate which we capture actually, because there's a blend of lot of different kind of fees which we charge to different stakeholders.
Okay, thank you.
Thank you. Our next question is from line of Shreyans Mehta from Equirus. Please go ahead.
Yeah, thanks for the opportunity. My first question is on the industry. So we were thinking that probably in terms of credit cards, the spend-based limits which were there would be through. But now we are seeing a lot of companies again increasing the spend-based limits or probably the restrictions for accessing the lounge. So how does one see this moving? It's just that one bank has started. So how should one look at this portion?
So Shreyans, I think we have also updated about the spend base earlier also that, it is not completely implemented and there are changes happening. So it's not that, the previous spend base, it has started from last December onwards, right? It's going to be a year, but not completely full-fledged. So I would say that still this exercise is on, and we would say that right now it's just one issuer who has further changed or enhanced the spend limit, and there will be other which will be following now in terms of changing the benefits. So I would say that all these were, we would not say that we have completely considered that these changes would happen. But yeah, I would say that this will further take at least a year for us to stabilize. So yes, there will be these changes in terms of additional limits enhancement which will be happening.
Got it. And despite that, we still continue to maintain our 20% revenue CAGR growth for, let's say, at least next couple of years?
So Shreyans, it will be very difficult right now to talk about it because, last time, whatever, have actually given the forecast, I would say that there will be a change in it because the way the spend limits are increasing. So I would say that there are chances that, we will not be able to stick on the projections what we had given in the past. So, and I will not be able to even commit directly right now because as I told you, that these changes will further take place and which will take a year for us. So I would say that, at this moment it will be very difficult to comment anything on the projection.
Got it. And ma'am, just one clarification. When you are saying, probably there could be, this 20%, whatever number we have given. So you're talking about particularly this year or probably even next year. So how should one look at F25?
I think Shreyans, it's what Librita was mentioning is it's early stage for us. So we are also very closely observing and monitoring the trends in the market. So as of now, I don't think the visibility is there of how the programs will be in the next couple of years. There is a trend that, typically when something is done, typically there are new projects or new cards that are launched, which may have newer benefits. And the demographic shift of users will migrate from one program to another program within the same issuer portfolio and across issuer portfolios. But for us to actually quantify what the number would be, I think we are fairly early and we probably don't have enough data to quantify that.
Got it. Sure. Second question is in terms of, the revenues from other segments or non-lounge segment. What is that proportion in 1H and what could be in 1H FY24 if that number is available?
So currently it is around 6.7%, which is actually increased if you were to see Shreyans. I think last time when we had a call, we said we moved in the last 2 to 3 years from a 2% to a 6%. However, it is, improving and we continue with our guidance of, having 20% contribution of all the other services other than the lounge in the next 4 to 5 years.
Got it. And last question from my side, in terms of employee benefit expense, can you just split between the ESOP cost and what is the additional cost due to the addition to the employee count?
Okay. So, Shreyans, the ESOP cost comparatively, from the previous quarter has not increased much. So, primarily the increase is driven by the recruitment and the recruitment related expenses.
Okay. So, is it fair to assume that this number on a recurring basis would be closer to 10.5 crore on a quarterly basis?
It would remain in the same range because we are hiring, as we had mentioned, that we are hiring across the regions. So there would be an investment in the talent related costs.
Got it. Got it. That's it from my side. Thank you and all the best.
Thank you. Our next question is from line of Mausam Mehta from Wealth Guardian Services. Please go ahead.
Hello. Hello, am I audible?
Yes, Ms. Mausam,
Yes.
please go ahead.
Yeah. So one thing I wanted to ask is the technical glitch that we had recently faced. Can you just explain a little bit about it? And what sort of precautions we are taking it going forward?
So there was integration which was actually ongoing, and that was one of the reasons that this had taken place. So it was integrating with one of our clients, and it was also a international integration which we were doing for one of our clients. So I would say that because of those changes which were happening, that glitch had happened. And if you have to ask me that, if we have taken care for the future, yes, we have, to ensure that, this does not happen. And I think our CTO will update you on this.
Yeah, so actually we have integration with multiple partners. So one of the things that typically happens is there are upgrade cycles that happen, and in case there is a mismatch in that upgrade cycle, some of these things tend to occur. So it was one of those cases, like Rebecca was mentioning, and I think we have taken steps to ensure that there is no such repeat in the future.
Okay. Okay, fine. And my second question was regarding the increase in trade receivables. It has increased approx 140 crores as compared to March quarter. So any particular reason for it?
Yeah. So the reason was, so I will actually go back to first answering in terms of, that why this spend base has also started, okay? So the thing is because of the cost increase as well at the client end. Now, what is happening is that the clients have actually budgeted a certain amount for this particular, service or the benefit what they are giving to their customer. And as the budget was exhausted, so it was in terms of, the approvals which was taking time at that end. So that led to a delay in the payments from their end to us, and that was the reason that, why we actually had to use it.
Okay, fine. Thank you.
Thank you. Our next question is from line of Yash Tarak from RSPN Ventures. Please go ahead.
Thank you for the opportunity. As we can see, there has been an extraordinary increase in the employee expenses. I would just like to know where these employees will be specifically used in the long run, and when can we see a similar increase in revenue as compared to the employee expenses?
Yeah. So there is a finite answer and a little not so finite answer to your question. One is basically why we have taken employees. It is absolutely as a part of our expansion strategy. We do not want to be dependent on one type of client, and we do not want to have only one type of service. So we are expanding services on one side, and you would have heard in the call that there are many services that we have added. On the other hand, we are not wanting to be dependent on client, and hence we are adding enterprise as a client. However, just tell your people that when we add an enterprise, the revenue coming out of enterprise is not comparable to a bank. It will be far smaller. So point number one. Point number two, if you were to look at the go-to-market strategy, we are a lean team. So we are dependent on actually going to those enterprises or industries where we are able to really talk to a few clients and get bigger volumes. So as we speak, we have already started doing that, and that has long gestation periods. and because of which it will take time for us to really see a significant improvement in the revenues coming from enterprises. And that is why we keep giving guidance that 20% of the revenue will happen only after 4 to 5 years, because it's a very slow burning process. And we continue to see that. I mean, and to answer your specific question in terms of how much it will, so frankly speaking, we have increased our employee by almost 12 to 20, and that's the plan. So we've hired few, and we will hire few in the coming quarter. If I were to just give you a guidance, if I were to just do a mathematics of our overall GDP to the number of employees, if you want to take that, or maybe our turnover divided by the number of employees, that will give you a fair idea as to what is the contribution of per employee in terms of revenue in future.
Okay, thank you. And secondly, when the technical glitch had occurred, so there was an issue and there was a statement passed by the airport operator with regards to an issue in the contract. So is the contract still intact, or are there any issues still ongoing?
Yes, your voice is a bit muffled. Can you please switch to handset mode?
Can you hear me?
Yes, sir, please go ahead.
It is not clear.
So yeah, with respect to a technical glitch, there was an issue, and the airport operator had mentioned that there was some sort of discrepancy in the contract which had occurred from your end. Is the contract still intact? Is everything fine with the airport operator now?
So all our contracts are intact, and there is no such glitch in terms of our contract getting expired, or there was an issue with the contract with the operators. If the contracts were not in place, I would say that the programs would not be running. So all the contracts at both the ends with the clients and the operators are in place.
Okay, thank you. That's it from my side.
Thank you. Our next question is from the line of Angad Kakdare from Samiksha Capital. Please go ahead.
Thank you for the opportunity. My first question is on the number of passengers accessing lounge. We are kind of seeing a decline over the past 2-3 quarters. Even though the credit card and the total passengers are increasing. Just wanted to understand where this number will stabilize. Can you just give a rough, can you just throw some color on the same?
Your statement entirely is not right. It is still positive. It was still positively growing. However, your statement is right in the manner that it is the growth is decelerating, and I agree. And this quarter is the first quarter where we are seeing actually the access is actually lesser than what it was corresponding period, which is first half of the year. So if you were to really look at the macros, they are very well intact, whether it is airport traffic or for that matter credit card growth. However, as we mentioned also in our previous previous quarters earning calls, that the spend-based program that is getting implemented by banks, we try our best in terms of putting our simulating models to ensure that we are closer to what would be the reality. But this time around, we have seen that the numbers are a little sharper in terms of decline than what we are expecting, and unfortunately, it is still not known. Not every single client has actually implemented this, and I'm sure it's also in the common domain which you and me also as a consumer receive from the bank. Recently, one of the banks actually increased the spend limit, quarterly spend limit from a 35,000 to a 75,000. So that we did not expect, because we thought that the bank had already introduced the system. But now with further increasing and becoming sharper, I think this is what is not known, and we cannot actually foresee, and we cannot actually put it in our forecast. So these are some of the uncertain changes that we are seeing and witnessing in the spend-based program, and that is why our inability to really put a number to the forecast properly, though we keep doing that.
Sure, thanks. And on the guidance front, on the gross margin guidance, are we still intact or any change in that?
No, we will stick to our gross margin guidance, so there will not be any change in the gross margin.
Sure. And apologies, I missed on the revenue front. So are we going back from the 20% growth guidance for FY25?
So as I told you that, it will be very difficult for me to right now give you any right answer on this, because we are further seeing the changes happening. Because, with the existing clients who have already implemented the spend base, have further started changing in terms of their limits. So I would say that, to actually give you the right answer, it will be very difficult, because this thing in terms of the changes will still further take another year or so. So yes, and I would say that yes, there will be certain changes in terms of whatever was given as a guidance in our last quarter.
Okay. Thank you. I'll get back in the queue.
Thank you. Before we take our next question, we would like to remind participants that you may press star and 1 to ask a question. Our next question is from the line of Shreyansh Mehta from Equirus. Please go ahead. Hello? Our next question is from the line of Ayush, who's an individual investor. Please go ahead.
Hi. Unfortunately, I have to join back the queue. Thank you.
Sure. Our next question is from the line of Neeraj Vijay Kamtekar from Prosperity Financial Services. Please go ahead.
Thanks for the opportunity. Sir, I understand that our company's business depends on the complementary benefit available to the card holder to access the lounges. And so the continuation of the complementary benefit to the card holder is necessary. Is it my correct understanding?
Yes and no, both.
So can you explain why? Yes, I understand, but why no?
Yeah. So yes, you're right that, actually if you look at it, the way the business started was more, providing the benefit to the cardholder, which is a complementary benefit which was given by the network provider or the issuers. However, right now it's not just a dependency on the free benefit which has been provided by them. Right now, even the company is working with, enterprises. We are also working with airlines. We are also working with e-commerce. So I would say that there are multiple and different customers who are coming. So it is not that, you only a complimentary benefit given on the credit card. There are enterprises who are giving this as a benefit to their employees or even to their vendors, right? Or I would say that when I say that OTAs are also giving it as a loyalty benefit to their customers. Then airlines are also giving as a loyalty benefit, as well as customers an option to buy the lounge or the other services. So I would say that yes, it used to be only as a complimentary benefit earlier, but right now it is not just one of the gifts. There are other options as well.
But what is the contribution of the other business from the other than the card holder? Say you mentioned that there are the airlines, OTA, enterprises, etc. But what is that percentage from that they are providing the total business?
So right now the majority, yes, is from the complementary. But however, if you see that the other lines are also growing. So I would say that it is too early right now. But yes, eventually you will see that, the spread will also change.
We did also mention about Amazon during the Prime Day period, Amazon Prime Day period. You as a consumer could have actually gone there and availed the services where we said that, as a consumer, you will get 25% discount on the walk-in rates and you can buy the lounge access and actually go and access the lounge and use the benefit. So these kind of things we are doing. But yes, to answer your specific question, yeah, it is very small as of now, but it will be growing and it will be growing exponentially.
Thank you for the answer, sir. Due to the interest of time, that was our last question for today. I would now like to hand the conference over to Ms. Livrata Kalat for closing comments.
Thank you all for joining our earnings call today. We hope your queries have been answered. For any further queries or information, please contact our investor relationship team at EY. On behalf of the company, I thank you all once again for your time and participation. Do take care of yourself and goodbye. Thank you very much.
Thank you. On behalf of Dreamfolks Services Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your line.